Everybody's talking about interest rates, the Fed, the housing market recession. But what if I told you this story goes way back, decades ago, with one decision that changed American housing forever? My name is Patrick Donovan. Today we're talking about how a government policy aimed at enhancing home ownership has turned into one of the most manipulated markets in human history.
This is air traffic control. You're cleared for takeoff.
Flight attendants, prepare for takeoff, please.
Everybody's pointing the fingers. You can see here, Realtor.com, Redfin, they all got articles out there, right? Talking about only 28 out of every 1,000 U.S. homes changed hands this year, the lowest turnover in decades since 1995, if you read the article. And I'll have these articles down below in the description so you read them for yourself. You got Mortgage News Daily talking about we got good economic data, which is going to push up rates again. And then you got the Treasury Secretary warning of a housing recession and points to the Fed for not lowering interest rates. And here's the thing. It is not the Fed. It's not the buyer. This is a result, or dare I say, an aftershock of all the manipulation that the government has done in the past. When you talk about a housing market that's frozen like it is right now, lowest sales in a long time. They're talking about worst sales we've had since 1995, year over year, for like a whole year. It's getting pretty bad out there, but everybody wants to point the fingers. But here's the thing. We're going to go through the history of how this all began. So you definitely don't want to go anywhere, all right? Because I'm going to go through the timeline right here. So as you can see, 1968 to 1970, a mortgage-backed securities was created. The government created Ginnie Mae for bundling mortgages. And what this did was this gave the government the ability to grab mortgages from the banks who could, back in the day, you couldn't lend out money if you didn't have money to lend, right? So whatever deposits within there from the patrons of a bank, that gave them the ability to lend out. Well, in 1968, the government stepped in and said, hey, look, how about this? How about we buy those loans from you, repackage them in securities, and sell them off on the housing market, or sell them off into the economy, right? So, and it was a good thing, because after that, well, housing market exploded. Then we go to the 1990s to 2007. Wall Street's expansions. The banks create exotic mortgage bonds for profit. Oh, big surprise. The private companies, billionaires out there creating exotic products to sell them off. I don't know if you've seen the movie The Big Short. It gets pretty scary when you look at what they were doing. They were taking these loans and all these things and chopping them up into these subprime loans and put them in other securities to try to bury them between all the paperwork. And then when obviously people couldn't pay for their mortgages, it crumbled the entire housing market, which if you were alive during that time or you experienced it, you know what I'm talking about. And of course, The Big Short is a great movie to watch if you want to remind yourself of what the market was like. We're starting to see this manipulation coming to bear again, and we need to stop it. All right. In 2008 to 2014, Fed takes over. The Fed became the largest buyer of mortgage-backed securities. This is what they called quantitative easing or money printing. This is digital money printing, where they buy mortgage-backed securities from the lending institutions, right, with digital money that they create out of thin air, right? And then it manipulates the market so that the interest rates stay low. Well, when they do quantitative tightening, they're allowing these bonds to mature and then evaporating the money into thin air. It's crazy what the government is doing here. And then you got 2015 to 2019. It looks like while they were quantitative tightening, kind of balanced the market out. Well, of course, the pandemic hit and all hell broke loose, as you knew, and the housing market was nuts. I don't know if you were in the housing market during that time, but you're talking about people were buying homes with no inspection, which I never suggest. Buying houses that, bidding $50,000-$60,000 over asking price, waiving appraisals, all this stuff. And it really kind of locked those buyers into the homes because, well, they bought on future potential, and now the futures came and they realized that their house is not worth as much as they bought it for. Well, they overpaid for the home, right? During that crazy time. And so we never recovered from that, right? So now you see high rates and prices cause affordability, high rates, mortgage rates, and the housing prices that were pushed up generically are causing an affordability crisis. And this is kind of the history of a mortgage-backed securities. And this is kind of what, when you hear the Treasury Secretary tell the Fed that they need to drop the rates, what he's really saying is print more money. But here's the problem. When you print more money, it causes inflation. You don't have to be a rocket scientist to understand if inflation goes up, housing prices go up. And once again, that just kind of compounds the problem that we have. Now, with all that being said about the mortgage-backed securities causing problems, and hopefully they don't do this. I mean, I hope, to goodness sake, they do not start printing money again, because I'm going to tell you right now, it's just going to cause issues. But here in Savannah, let's go over some numbers so you can kind of understand what's going on in Savannah and the surrounding areas. So right here, as you can see, the market for Savannah, price year over year. Now, we're talking about October stats to October of this year. So 24 to 25. Okay. So in Savannah, price year over year went up by 4%. Inventory skyrocketed by 28%, and the days on market are up by 19%. Because steady demand, but a slow sales pace. In Pooler, prices up by 3%. Inventory up by 59%, and the days on market up by 33%, meaning huge inventory surges, buyer has leverage. And I would say this to buyer right now, if you're a buyer, you have leverage. You are in charge of this process. I think a lot of times, in the past, we didn't believe it. No, you can literally ask for whatever you want, and the sellers will probably capitulate. If not, you'll just find another seller that will. That's the thing about competition, supply and demand. When there's more supply than there is demand, well, then it puts the buyers in the driver's seat. Now, if you look at numbers like, monthly inventory, statistics and all that stuff saying that, oh no, it's actually a seller's market. Well, it's a seller's market in theory, but the truth is, buyers, you are in control. Richmond Hill, price over year went down by 7%. Inventory up by 7%, and the days on market shot up to 57 days. This higher end market is just cooling down. Richmond Hill is the highest priced market in our area when you go to median home sales price. Now, if you go to average home sales price, Savannah's got some luxury homes in there. So, I mean, at that point, Savannah does shoot over Richmond Hill. But, Richmond Hill has their own luxury market too, with the Ford Field and River Club and all the houses that are on the waterways with docks and stuff. So, Savannah and Richmond Hill kind of fight each other over who has the most luxury market. Okay. Port Wentworth, price year over year, 1% up. Inventory's up by 10%, and days on market up by 32%. The builders dominate new listings in this area. I mean, it's just without question. New construction in this area is crazy. Now they got all these incentives out there for you to take advantage of. 3.99% interest rates, 4.99% interest rates, $20,000 towards whatever you want. Like they're doing it. And if you want to negotiate more, they will negotiate. Rincon, price year over year up 3%. Inventory up by 50%, and days on market up by 21%. Stable but affordable. Rincon is more affordable than most of the area. Guyton, prices are down by 1%. Inventory up by 42%, and days on market is up by 1%. Small dip, but steady values. So in summary, if you didn't get anything out of this video, just understand that this story is old. This is decades old story that everybody tries to forget what happened in 2008, 2009, right? They're not seeing, they keep repeating these same patterns, which make no sense. People are talking about the dollar just being taken out of the reserve asset if we keep doing this. And we keep borrowing from China and trying to manipulate rates. If they would just let the market do its thing, we would be able to afford groceries. We'd be able to afford housing. Heck, think about cars, for instance. Like, what is a car payment these days? What is insurance these days? This is the thing I dislike about government intervention and I'm not on one side or the other. I don't want you to think that, oh, he's talking bad about the Republicans or the Democrats. I'm going to put it like this. I'm very fed up with both. I mean, how is this the only choices we have? How did we get to this point? It's very irritating, and they just pull out the same crap over and over and over again, manipulating the numbers. Do you think the interest rates are really 3%? I mean, is that the way you feel about it as a consumer? I know I don't. I go to the grocery store. I just, there's no way. You know what I'm saying? And then you hear the federal chair Powell say, oh, well, that's from 3 to 1 years ago, right? Then inflation is now impacting us now. But when we were in those times, you weren't saying inflation was the 15%. You were still saying everything was good. So, like, what is the real story? And now we got the government shutdown and everybody's like, oh, well, we don't know what the numbers are, but we're making cuts anyway. Like, it's just the inconsistencies in this government is really upsetting me. Now, if you want to know how these policies affect your home value or your buying prospects, you can give me a call at 912-657-3544. I'd love to get with you and get a game plan together to kind of navigate these crazy waters, because like I said, they're not going to stop manipulating. That's just kind of what they do. How do you prepare yourself to combat these challenges? I'd love to help you. So give me a call and I'll talk to you guys soon. Bye.